Hello and welcome to the channel. Welcome to TMP Group. My name is Tom and today is Wednesday. It's the 9th of February 2022. It's about 12:30 here in Arizona, Tempe, Arizona, coming at you with the markets being up and a very positive day if you're long on your stocks and you are long-term holders like we are here at the TMP Group. Looks like our stocks are ripping. Taking a look at the S&P 500, the Dow 30, the NASDAQ, and the Russell 2000, all up. Current price of crude oil looks like it's coming in right around $89.59. And I do want to talk today about three companies that I personally believe have the potential of following in the footsteps of Google parent company Alphabet in performing stock splits, and three companies that are poised or they may follow Alphabet's lead with the stock split. So before we jump into this, I do have to remind you that I'm not a financial advisor. Everything that I say here should be taken for entertainment, educational purposes only. Never trade, buy, or sell any stock or cryptocurrency solely based on the opinion of someone else that you see online. Any social media platform. Do your own homework, do your own due diligence, make your own decisions, and become committed to the positions you're in. And in my opinion, that will help you gain the most confidence in your trades, be able to sleep and invest without any stress, and get the long-term wealth that we're looking for. If you are new to the channel, hit the subscribe button to hear more from us. If you like what you hear today, leave me a big thumbs up, and feel free to share this with friends and family. Hitting the like button doesn't cost anything, but it helps with the YouTube algorithm and it'll get this video out to more people. So I do want to jump into, like I said, there are three companies that I believe are in a good position right now to follow in the footsteps of Alphabet. And we know that recently Alphabet announced its 20-for-1 stock split. There are three other companies I want to address today that I can see following in their footsteps in the very, very near future. The stock split for Alphabet should occur in mid-July, and that's 20-for-1. So for every one share of Alphabet that you own, you'll pick up 20 shares. There are three other companies that have a very high price tag on them right now that I believe will soon follow suit. So, assuming that the shareholders vote, and there's no reason that they shouldn't, that they vote for the split for Alphabet, each share of Alphabet stock should be right around $145 on the 20-for-1 split, and that'll happen post-split, hopefully by mid-July. That would be down from a close this past weekend of right around $2,866 a share. So, what do we know about stock splits? And first of all, before I get into the three companies, why do stocks split? Now remember this, when a stock split is announced and when it happens, it does not change the value of the position. It only changes the number of shares that are out there. So a stock split is a way for a publicly traded company to alter its share price and alter the outstanding share count. And this is important for a couple of reasons. But they do it without affecting the market value. So, for example, if a company shares were trading at $400 and you own 10 shares, you would have $4,000 worth of said company. If the company announced a 4-for-1 split, then each one of those shares that were worth 400 are now going to be worth 100, but you would have 4 of them. So you would have 40 shares at 100 versus 10 shares at 400, and you would still have the same $4,000 position in your account and value in your account. So there is no movement to the price of the stock directly related to the split, but we have seen stocks become affected and jump based on stock splits purely because of the excitement behind the split. And there is a couple of reasons that companies split that should get us excited. So the common type of a stock split is called a forward stock split, and it tends to get investors excited for these two reasons. Number one, that stock splits normally make the shares more affordable for retail investors. So if we're trading with $50, $500, or $5,000, An example, we're looking at shares of Google right around $3,000. We can buy 1.5 shares, and we can buy fractional shares. And retail investors tend to get excited when they can buy more shares of said company because the percentage of growth remains the same. Even though some brokerages allow us to share or buy fractional shares, in fact, if you are with a broker that does not allow you to buy fractional shares, I do have a link down below to Webull where you can buy fractional shares. And even though there's a lot of haters on Robinhood, I have a link down to Robinhood where you can also purchase fractional shares. But if you're with a broker that does not allow you to buy fractional shares, a stock split makes this the purchase of a higher priced stock or a higher valued stock, and those two words are interchangeable but exactly opposite sometimes, makes it more affordable for the retail investor. You'll be able now to buy in July a single share of, assuming that the price is where it's at today, you'd be able to buy a single share of Alphabet or Google right around $145 as opposed to paying $2,900 for it. Secondly, and I think more importantly, the forward stock splits are almost always a sign of a successful business and a successful publicly traded company. Share prices would not be high in the first place if the company were not executing well and innovating. So, having seen numerous big name companies receive a boost after announcing their stock split, I believe that the following three companies are high flying stocks that they may be the next stocks to follow in Alphabet's footsteps. So the first one I want to talk about today is Amazon. Trading under ticker symbol AMZN. Believe it or not, this e-commerce giant, Amazon, has actually split its stock 3 times since its initial public offering. However, all 3 times were within a 15-month stretch, and that occurred between June of 1998 and September of 99. So we're sitting in February 2022. It's been roughly more than 22 years without any split activity. And the kingpin of online retail now has a stock price over $3,000, which is a prohibitive cost for some people to own one share. Again, you can buy fractional shares, but there is a mentality and a psychology behind owning a share. The reason Amazon may jump at the opportunity to split stock is simple. There has been a changing of the guard. So as long as Jeff Bezos was CEO, it seemed unlikely for a stock split that it would even be considered. But now with Andy Jassy officially taking over the reins on July 5th last year, the prospect of a split seems more likely. Jassy is the one that founded and led Amazon's web services. It is the high margin cloud infrastructure service agreement that's #1 globally. So not just nationally or internationally, but globally in cloud spending. Furthermore, a stock split with Amazon may light a fire under the Amazon shares after a mixed fourth quarter report. Remember, a stock split announcement could help reassure Amazon investors and shareholders that the company's long-term vision is still well intact, and that's what we're looking for. We're looking for long-term success and long-term vision, and I think we'll get that out of Amazon. So we think that Amazon at these levels could be poised. I'm not putting a time frame on it, but I think we could see movement on all 3 of these companies very quickly. So just something to keep on your watch list. The next one I want to talk about is one that's not held by TMP Group. Amazon is, and the next one isn't. The next one is Autozone. And Autozone is another high-flying stock. It is probably ripe for a stock split. It's the automotive replacements part company. Amazon trading under the ticker symbol AZO on the New York Stock Exchange. The company has split its stock twice since becoming a public company. But it's been almost 28 years since the last split happened in 1994. So nearly 28 years since the last split, and Autozone shares have crested and jumped above $2,000. but now could be the perfect time for Autozone to split its stock. There's only 20.6 million shares left outstanding, and Autozone's buyback opportunities are narrowing, and more importantly, the company's lofty share price has significantly reduced the volume, the trading volume, the average traded volume over the past 2 decades. And a split could be a genius move that causes Autozone investors to stomp on the accelerator and increase the frequency and increase the volume. So look for Autozone in the very near future. And if you find talks about splits, let them know that you heard about it here first. All right, and then last but not least is another one of the TMP Group's core holdings. It is the electric vehicle maker Tesla, and it is a fast-paced stock. We think that it could follow in Alphabet's footsteps as well. Tesla has split shares once, August 2020, since becoming a publicly traded company in 2010. And there's actually 3 reasons why I think Tesla could be primed for a stock split. It makes sense. To begin with, the previous stock split, so if you look back at what happened in August of 2020, it came with a 5-for-1 split. And the shares were trading right around the levels of $1,375. They're a bit lower now than that figure. At the moment, I think the shares closed around 923 over the weekend, but they did top 1,200 just a few weeks earlier. So historic precedents would suggest a growing possibility for a split at these levels. So that's number one. Looking where it split before at $1,375, and now we're approaching $1,200. Of course, we're back down to 9, but we can see Tesla move in leaps and bounds. It doesn't take that much to move Tesla. Okay, number 2 is that the CEO, Elon Musk, he's well aware that retail investors strongly believe in his innovation in the future of Tesla, and it's in the best interest of Musk to ensure that retail investors have easy access to purchasing Tesla stock. Again, if you're not able to trade fractional shares, then Tesla, at $940 could be a stretch. If you're working with a $10,000 budget and that's all you have right now, you can purchase 10 shares of Tesla, or you can spread it out. So that is a good reason for Tesla and Elon Musk to look again to make his shares more easily accessible to his retail investors. He is very pro-retail. Lowering the share price of Tesla could bring a gamut of new investors and new traders into Tesla, and where they can put their money to work, increase the volume. And then number 3 is that Wall Street remembers the last time Tesla announced a stock split. I believe that the announcement came out on August 11th, 2020, and led to a 60% rally. So a 60% rally in the stock within the 20 days leading up to the split. So it's possible that another strong rally could happen with Tesla. And I think all 3 companies are looking at that as well. Each one of these 3 companies are very strong. We have high conviction in 2 of the 3. AutoZone, AZO, is not, like I said, a stock that the TMP Group is heavily invested in. We're not invested in it at all. In fact, I don't know any of our private members that do carry AutoZone. But definitely something we want to look at and have on our watch list. As far as Amazon and Tesla go, I've given you some things to think about, and do your own homework, do your own due diligence. Let me know down below in the comments what you think. Do you think that that any one of these 3 companies are up for a stock split in the near future, and I mean in the next 12 to 24 months or sooner? And would you be a buyer? Would you buy more at a lower share price if there was a split? And that's all I got for you today. Again, on this video anyways, I just wanted to jump in. Do firmly believe that those 3 companies, after Alphabet announced their 20-for-1, I think we see 3 out of 3 of these companies entertain the same thing. All right, I hope everybody's having a great day. I hope the market continues to perform the way it's going. Stocks are rising as treasury yields are declining, which is always good for most of the holdings that the TMP group has, heavy in the tech sector, heavy in innovation. But be careful with your bets, or your investments. Never make it a bet. Don't make it a gamble. Invest in something you believe in. Stay convicted in your stocks. Put your money to work and sleep easy with knowing the stocks that you own are high conviction stocks. And when you hear the FUD, the fear, the uncertainty, the doubt, zoom out on the charts. Look at how the stock has performed over the past 1, 3, 5 years. And you're going to find that most of the time that these companies are up and to the right. And those are the companies we want to be in for the next 5, 10, 15, 20 years to create generational wealth. Thanks for stopping in today. Hit the like button if you already haven't done it on the way out. And I hope to see you on the next video.